is another Thank God Friday to the start of the weekend, everyone. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's the 23rd of January. We hope you've had a great week so far.
All right, let's tee off with your news now for this Friday. African Export-Import Bank has officially terminated its credit rating relationship with Fitch Ratings. The bank said the decision follows a review and stems from the belief that the rating process no longer reflects an accurate understanding of Afreximbank's establishment agreement, mission, and mandate. In Ethiopia, the central bank has announced plans to launch an investment startup bank next week to boost funding for entrepreneurs. The new bank will operate under the umbrella of Ethiopian Investment Holding, aiming to improve access to capital for startups across the country. In South Africa, Minister in the Presidency Marupene Ramakopa has briefed the media on government's performance against the Medium-Term Development Plan 2024 to 2029. The update follows Cabinet's consideration of the biannual progress reports covering implementation from April to September 2025. Here are excerpts.
In terms of key interventions that has improved or driving the improvement of performance, we have said that to translate the medium-term development plan into tangible outcomes, the DPME has driven and supported several flagship interventions that are strengthening performance across government. And some of them include Operation Vulindlela, which is playing a critical role in removing structural constraints to economic growth. During the reporting time or reporting period, progress has been reported in energy reforms, logistics, and water infrastructure coordination. This has contributed, of course, to the improved system performance and greater private sector investment confidence. We have also been able to coordinate and support the district development model, which is a central platform for integrated planning and implementation and aligning national, provincial, and local interventions. There is a growing focus, of course, on priority projects to unlock local and economic development and to improve basic services. In terms of frontline service delivery monitoring, we have been able to look at the fact that this core program of the DPME has been strengthened to focus on rapid feedback and improvement, finding sites, visits that are now linked systematically to departmental improvement plans and management accountability across government. With that outline, I will now provide the update on government's performance on the implementation of the MTDP. The overview of the national context is as follows. Despite global economic volatility, South Africa recorded 0.8% of GDP growth in the second quarter of 2025, the strongest quarterly performance since 2022. The unemployment rate declined by 1.3 percentage points to 31.9%, which gave us about 248,000 jobs added in the third quarter of 2025.
In Nigeria, President Tinubu approves investment-linked incentives for Shell's Bonga Southwest oil field and greenlights new oil import projects in Ogun State. The approval follows a meeting with Shell CEO Wael Sowan, potentially paving the way for the $20 billion deepwater project in 2027. Presidential consent also clears commercial oil drilling at Tongeji Island, making Ogun State an oil producer and the immediate start of the Olokola deep seaport to be known as the Blue Marine Economic Zone, aimed at decongesting Lagos ports and boosting regional trade. In the meantime, Central African leaders order urgent measures to stabilize economies. At an extraordinary summit in Brazzaville, 6 nations agreed to repatriate export revenues and state assets held abroad, prioritizing the extractive sector. Governments were directed to finalize negotiations with companies to return funds designated for environmental restoration, a move seen as crucial to boost regional bank liquidity amid slow growth and weak commodity prices. Meanwhile, at the World Economic Forum in Davos, Switzerland, where the president of Ghana, Dr. John Mahama, addressed a side event on Accra Reset, which he described as an initiative that should prepare Africa in today's changing global order. Attending the event was Nigeria's former president, Olusegun Obasanjo, the vice president, Kashim Shettima, as well as top African policy leaders from Afreximbank, the Africa Finance Corporation, among others. Let's listen.
Debt distressed, crisis-ridden economy, we've achieved an impressive turnaround with a stable macroeconomy characterized by single-digit inflation, a strengthened currency, and increased business confidence. But here's what keeps me up at night. Ghana's success alone is not enough. However admirable Ghana's turnaround story is, we cannot be a jewel in the dirt. We must work together as Africa. We must knit together the patchwork of success stories. And that is why we're here in Davos today. To take what's working across many countries in Africa and the Global South and scale it up across other countries. To move from resetting one country to resetting the entire development model for the Global South. And let me be direct about what we're up against. Too many of our countries are caught in what I call the triple dependency. We depend on others for our security choices. We depend on donors for our health and educational systems. We supply the world's critical minerals but capture almost none of its value. This isn't sovereignty, it's a trap, and it's getting worse. In my quiet moments, as I try to find solutions, here's what I've learned. Crisis creates clarity. The clarity is this, that we must build our own capacity to act. There's precedent for what I'm proposing.
In other news, Nissan motto to sell its Rosslyn, South Africa plant to China's Chery Automobile as part of its turnaround plan. The deal, still pending regulatory approvals, will end Navara pickup production at the facility in May if completed. Nissan is closing or consolidating 7 plants globally, with financial terms yet to be disclosed. Finally, on news now, the CEO of the Nairobi Securities Exchange, Frank Mwiti, provides an update on recent IPO activity and new listings, shedding light on market performance, investor sentiment, and the exchange's growth outlook. Let's listen.
The rally started in 2024. At the end of 2024, we were rated the top performing exchange in Africa by Morgan Stanley.
Yeah.
That momentum built from Q1 of 2025 last year. We finished last year, 2025, again on a high. We were rated second only to Egypt, returned above 50% in dollar terms. All our indices are up. We crossed a very significant historic mark for our market capitalization, 3 trillion shillings in November. We are above that now as we speak. Our bond side, again, we blew out the numbers. We are trading about 2.7 trillion shillings. Again, another historic milestone in NSE's 70-year history. We've begun this year again on a fantastic run. Our trading volumes are up. Our indices are up. The valuation metrics are also looking good. We have pipeline for new listings, KPC being one of those. Yeah. Family Bank is preparing to come list by introduction. AA Kenya is also listing by introduction. Wow. We have a number of REITs, real estate investment trusts, coming through. One is for Trific, which will be a dollar-denominated one. There are cross listings that we are pursuing. I can't mention the names now because they're confidential. But the point is that even this year we are on. Okay. Yeah. And I should also mention, there are 2 things we did in 2024 that have started bearing fruit, which is, number one, we set up, we said, if we are going to be a relevant exchange in an economy like ours, then we must be responsive to the single most important sector in our economy, which is agriculture. The rally started in 2024.
Yeah.
this Friday. The show returns shortly with Grace giving us the markets round at the FMDQ Archives Room.
Horticulture and the coffee, agro-processing, livestock, oilseeds, and the cereals continue to absorb millions on farms, in aggregation, in transport, cold chains, and the basic processing. Productivity is, however, uneven, but the employment footprint is large, and there is potential to expand into on and off-farm jobs. Second, SME, light manufacturing and industrial parks. Textiles, garments, leather, and agro-processing have shown that Ethiopia can create large number of entry-level wage jobs, especially for young women, when production inputs are reliable. As an example, industrial parks in Ethiopia mobilized private investment and created over 90,000 jobs in 2022, with approximately 87% of these jobs held by women. Third, services linked to urbanization and connectivity. Construction, logistics, retail, healthcare, hospitality, and transport are among the fastest labor absorbers today. Within this ecosystem, aviation plays a catalytic role. Ethiopia's aviation industry is not only a major direct employer, it also enables entire services and production systems.
Welcome back to Money Moves. Let's now go over to Grace for updates on how the markets wrapped up on this last day of the week. Hello there, Grace.
Hi, Melissa. Let's now take a look at how the markets finished trading for the week. Starting off with the equities, the Nigerian Stock Exchange was up by 0.07%, while the BROVM inched up 0.36% to 355.83. The Nairobi Securities Exchange was also up by 0.06% to 194.60. In South Africa, the Johannesburg Stock Exchange gained 0.47%, while the ZSE fell by 0.32%, and in North Africa, Morocco's MASI slipped 0.34%. Let's do a quick round on some of the Pan-African currencies. The Rand eased 0.36% to 16.18 against the US dollar. The Egyptian pound firmed 0.21%, while the CFA franc dipped 0.13% to 558.77. The Kenyan shilling held steady at 129. The Moroccan dirham slipped 0.06% to 9.16, while the naira inched up 0.07% to 1,421 naira 53 kobo as at 13:54 GMT. Now let's switch into the commodities data deck, beginning with energy prices. Brent crude rose 1.83% to $65.23, and US WTI climbed 1.89% to $60.48. Natural gas eased 0.75% to $5, while RBOB gasoline gained 1.06% to $1.83 as at 13:48 GMT. Now finally, two metals prices. Gold rose 0.39% to $4,932.40. Copper gained 1.70% to $5.87, and platinum surged 4.61%. Aluminium advanced 0.73% to $3,161.15, while iron ore was nearly flat, down 0.04% to $106.42 as at 13:50 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the market wrapped up. And that's it on today's edition of Money Moves. From me and the rest of the team here, we say thank you very much for watching and do have a splendid weekend.